Good morning, traders. This is Chris Buss with Traders Profit Compass with a pre-market look for Monday, August 31st. I hope you guys had a great, relaxing weekend and you're ready to go into this new trading week, the first week of September. What I'll do this morning, as I always do, is run through the indexes. Then I'll take a look at bonds, gold, and the gold miners, along with FAAMG, and some trading opportunities that might present itself for today. Okay, starting out with SPY, we had been in this trading range here between 348.50 and 350. Friday into the close, we popped that. So now 350 is a great line to shoot against. I did put in a revised trend line here in brown off the recent lows. So that'll also be a nice line to shoot against as we push higher. Futures are indicated up about 10 points. So we look to be opening green. Depending on how far that is, don't forget that that'll leave an open gap below price. So look for that potential quick gap fill down to Friday's close and then potentially a bounce back up. What should be cautionary would be a break below this trend line and a break back into the range below 350. That should be really cautionary for bulls. That would target a move back down here into the 348 range. So keep your eye on this trend line. Keep your eye on 350. What I thought was interesting here in the indicators is that the PPO, the momentum indicator, is poised here for a bull cross. Notice we had peaked early last week. We bled off some momentum, but we never saw that really affect price. That's a sign of consolidation. So if this puts in a bull cross right here, good chance that we push higher. Also notice that RSI never dropped below 50. It held that line. If we move up here, break out above 70, good chance that we move into a good overbought situation up here above. So as far as the indicators go, it looks good for this advance moving forward. Let's look at the Qs. Here we've been in a trading range between 289.50 and 293. Pre-market we are above. So what we want to see today is holding that 393 area and moving back into this 30-minute channel we've got penciled in here. So the PPO isn't quite as far along as it is on SPY. What the bulls want to see is this thing curl up and cross, and of course RSI stay above 50. So those potentially are in a good spot for the bulls. We just need to see price move above this 293 and hold it and get a little push higher to get this momentum heading back up again. We did have a development on IWM on Friday. We had been fading 156.50 and buying 155 for this chop zone for the last 3 days. Friday, right at the close, they popped it. And now in the pre-market, we're trading up near 158. That'll leave a gap below. But this might be the early signs of a turn higher for IWM. This would be, your banks and your value trade picking up some steam. If that value trade holds and persists, we should see it here in IWM. So If we were to pop 155, or excuse me, 158 right here, clear this congestion area, I think we'd see a nice push up to 160. So I'd be a buyer on a breakout above 158. I'd also be a buyer if price comes back to back touch this 156.50. You know, if they fill that gap right out of the gate, come back down and do a little overshoot between 157 and 156.50, I think that would be a nice opportunity to get long and then set your stop just below this 156.50 area. If the breakout's for real, it should not come back in this range. If it's a head fake and you see candles closing below 156.50, then your target again is 155. So that's how IWM sets up this morning. Looking at bonds, we've been watching this big bear flag play out. We had the quick impulsive drop. We had some consolidation. Then we had a follow-up impulsive drop that brought us below this 162 support level, which is now, of course, resistance on the way back up. So I'm short. I'm looking for 159, and then we'll see what happens if it gets down here. Interest rates have been resilient and rising. If we were to lose 159, then you know there's a lot of downside here if interest rates keep rising. I've set my stop just above 162. If price were to go up here and break above, then if you're trying to actively trade this, that would be a long right there, looking for a move back up to at least 163 as a first target, and then possibly 165. But as it stands now, it's a bearish setup, and I'm looking for lower, and that'll be helped if equities can continue to push higher, and if people continue to pile into the value cyclical trade, that'll bode well for interest rates moving higher. Moving into gold, we've been watching this consolidate within this triangle. We had a push to these highs. Then we had a quick pullback, and it since has been resolving. I looked at futures, we're down just about $5, so nothing major. But certainly we haven't broken out yet, and we haven't broken down either. So I'm in favor of waiting. Don't try to front run it here. Wait for the signal. If you see a breakout above, say, 185, 185.50, I think you can buy that and look for a move back up towards the highs, 192.50 in that area. If, however, price resolves to the downside and takes out this 179.33 area, I think you'll see a move back down towards 170. Notice this volume over price void. There hasn't been a lot of transactions in this area, so I think that potentially could be a very quick move. So keep your eyes on this triangle. I'm bullish above 185.50 and bearish below 179.33. Of course, the miners are following the metal. It too is consolidating in this triangle. To my eye, 42 would be a breakout where you could get long, and below 39 would be a breakdown where you can be short. I really don't want to mess around inside this triangle. I'd rather see if price can resolve itself first before jumping in and taking a position. So I have 42 and 39 alarmed in my system as actionable levels. Moving into FAANG, they've been a little on the soggy side the last few days, coming out of some really strong moves. Here we see Facebook pulling back to the bottom of this consolidation box around 293. If you're bullish and you want to take a position, you take it right here and get long, hoping for a move back up towards the top of the box at 303.75, 304 area, and you stay long against something like 291-ish. Really tight stop. If it breaks higher, you're in good shape. Then you can move your stop up to break even. If it breaks down, then you're simply out. But this is a real nice, objective location to be long. If you're more in the camp of this is going to pull back, sit tight, wait for a break of 290, and then look for 280. There's a big void here between 290 and 280. I think you could get short right here, maybe even 291 against the bottom of the box here at 290, 230. Keep it real tight and see if you get a downside break. I think it'll probably be tough if the Qs are up and SPY is up for this to really break down. It may not do anything today. I would favor being bullish given where SPY and QQQ are, but if it does break down, I think it's going to find 280 pretty quick. Apple starts trading today on a split adjusted basis. So these prices are going to come down. They'll be trading in the 125 area on the open. So you'll just have to play that one by ear. I don't know if it's going to be sell the news or rush in to buy, but you'll have to gauge that on your own if you want to trade it today. Maybe a good day to just step aside, or if you see something compelling and it just starts racing higher, you could jump in and set yourself a tight stop. Really no way to tell how that's going to play out today. So I'm going to be stepping aside and not really worry about Apple. Let's see how it trades, after the split, and, take it from there. That holds true for Tesla as well. That'll be trading on a split adjusted basis today. So be aware of that. If you want to get involved in either of these, just keep them on the screen, and you'll just have to take it bar by bar. Amazon got this nice little triangle formed here within the box. I still think as long as it holds 3,400, bulls are in good shape. If you don't have a position, you can play this a couple different ways. If it opens near 3,400, you can buy it with a tight stop below, or if you see price break above this downtrend resistance, you could buy it at, say, 34.10, 34.15 against this trend line and look for a move up to 34.50. But at the bottom of the box, that's about as good as it can get for an objective long. If it breaks below the box, I personally wouldn't, try to short it, but I wouldn't be long either if it breaks below. It may dribble down here to this 33.50 area, but as it stands now, I think it's an objective long. You can either take it close to 3,400 or wait for this breakout above the downtrend line. Microsoft has been pretty strong on this TikTok speculation. I've seen a lot of institutional order flow into the name. We've got this little pennant forming. I think above 230 is a place you want to buy it and look for 240. I really think it can get up there in the next several weeks. I would alarm 230 and I would buy that on the breakout. Not really interested in the downside. I don't really see that at the moment. Of course, if it does break lower, you're always welcome to short it. But I'm looking more on the long side on Microsoft. I think it has a compelling setup, and with institutional order flow behind it, I want to be looking to be a buyer and not a seller in this name. Google, a lot like Amazon, we've got this nice uptrend line to shoot against, as well as the bottom of the box here at 1630. You could be a buyer in here at the bottom of the box and against the trend line and look for a move above 1650. If you just held back and price were to break above the top of this box at 1650, I would definitely be a buyer there and be looking for a move towards 1670 to 1690 in that area. I think Netflix sets up really interesting for active traders. Last week, we saw this big impulsive $45, $50 move up here to $5.50. I've seen a ton of institutional call buying in the name, and now it's pulled back and has basically given us a 50% half-back pullback into this 520 area. This would be a great place, in my opinion, to try a long against, say, 515, right in that area. I think if it breaks this trend line, it's going to go right back up to 550. So I really like this surge with a 50% pullback with institutional order flow behind it. I want to be looking for a spot to buy, and I think anything in the 518 to 520, 525 area is going to look really nice, especially if the Qs stay strong and SPY stays green. I'd be a buyer of this breakout or against the 50% pullback, 520. I would be long there and set like 515 as a stop. That's about as tight as you can play Netflix, but I think this is going higher. Okay, moving on to some potential setups and places to alarm for potential swing trades. McDonald's is pressing the recent highs here at 215. There was an all-time high a year and a half ago at 220. So we may see a pop here and then a little hesitation at 220. But the casual dining space has really caught fire in the last 2 or 3 days. Really even more than that. We just wasn't on the radar screen. But I'd be setting an alarm either at 220 for the all-time high or just above 215 for this breakout. You can decide if you want to get long against 215 or to wait and see if the all-time high is taken out at 220. But I've seen institutional call buying. They're looking for more upside. So I really like this on a breakout into the 215, 220 area. This ENPH is still in this tight consolidation box. I think this is going to break out and just run higher. I've got 77.50 alarmed in my system for a buy. Those won't be cheap calls because this thing can really run when it breaks out, and that'll make those calls more pricey. But this is in the solar space, which has been on fire. I've been kicking myself for not really being involved in the sector. A lot of names. If you go look at the sector, a lot of names breaking out and running. I'm just trying to find a name that's at an objective place where I can get long against a well-defined level. And this one fits the bill so far. So be ready on ENPH on a break above 77.50. We talked about Pepsi last week. I think it was on Thursday or Friday. We got the breakout. I expect this to move up to 145. I think you can be a buyer right here. If it has a little weakness today, I would buy that and be long against, 138, 137.75, something like that. You don't want to see price come back below this breakout level. So I think we're at a well-defined spot. I'd look out into October on this one. You could either get, a 140, 145 spread, or just simply get the 140 calls. And then as it moves up, we can spread it later or even roll higher if it looks like it's going to take out the all-time high. But I like Pepsi here, long against the breakout at 138 or so. Peloton also broke out of this $10 consolidation range. I'm looking for a push to at least 182.50. I think you can be long against 72.5. I'd be a buyer either right here or on any weakness today that brings price back in towards 72.50. Hilton Hotels, just breaking out here above 90 into this prior value range. I like this long. Did see some institutional call buying in the name. So I like this long against 90. I think it's a real objective level. Looking for a push up towards 97.5, 100 area as a first target. The indicators look good. I like this one long. Denny's caught my eye. Again, another name in the dining space. I want to set an alarm right here at 13. I want to see price take out this resistance level right here at the 200. I'm willing to give up this dollar and look for a break above 13 to be a buyer. And then my first target would be 14.5, but really looking for a run back up here towards 18.5 or 19, where the original breakdown happened. You can see this big volume over price void. I think if it can make a breakout here above 13, I want to be a buyer there. I think that would be a great entry. And then we can just be long against the 200. So very objective level. And I like the fact that it's moving into this low volume over price void here. I think it'll move quickly. Darden, more casual dining. Again, we've got this void right above 90. It's already taken out its 200 EMA. I have an alarm set just over 90. I want to be a buyer there, and I want to look for a fast move up to 107.50. I think we can get that if the market stays constructive and we get that breakout. I want to be a buyer there in this casual dining restaurant space that is really picking up steam. If you look at other names in the space, like Shake Shack, we already talked about McDonald's, but if you look at Starbucks, that's been doing well, breaking out and moving higher. We already have a position in Dunkin' Donuts that has been performing. That's in the same space. So I don't want to go too crazy. Keep it in balance with the other stuff that you have. But I really like some of these names, how they're shaping up with Denny's, Darden, and McDonald's for breakouts into these low volume over price voids where I think price can move very quickly. Just a few words on the market as a whole. On the blog today, I post quite a number of charts that I collected from the internet over the weekend. Showing that put call ratio cratering, 15-year lows, institutional bearishness, retail FOMO, 75% of options traded have expirations of 2 weeks or less. That's a staggering number. That shows just how much speculation and FOMO there is in the market right now. And that's not only just, quote, dumb money retail traders. I see that on the institutional side as well. You see this flurry of call buying. Today they'll be hitting Friday's expiration. Some of them will be hitting 2 weeks out. But honestly, it's hard to find institutional buys that are looking out into September, October, November expiration. Everything is very short term. So, as I explain in the blog, I'm just assuming this is a bubble. Okay? I'm assuming that on one random overnight session or during the day, they're just going to pull the rug out and we're going to drop 100 handles on ES. I'm taking that on faith. I have no idea when it's coming. I've just accepted the fact that it will come. When? We don't know. We could go up 500 handles from here. We could go to 4,000, okay? I have no idea. Institutions may get to the point where they capitulate because they're falling behind on their benchmarks, and they come to the conclusion they just have to get in. And if that happens, all bets are off. We rocket higher. So I want to participate in the upside. I'm fully aware of the zillion yellow flags that are out there. But those yellow flags have been out there for months. And if you let the yellow flags dictate that you're either sitting on the sidelines or worse, trying to shoot against these all-time highs by, trying to get cute and shorting it, that's been a losing trade. If you're unsettled and unsure, it's fine to step aside. No harm done. But don't shoot against the highs. Wait for a signal. We will see a sell signal when it comes, believe me. And I will give you that heads up, okay? I think we'll know it when we see it. I don't think it's going to be this gentle rollover that takes weeks to happen. I think we're going to see a giant red bar, and then we'll see another red bar. The first one will catch everybody by surprise, and then everybody's going to hit the panic button, and then here comes a follow-up red bar. We will get out, and we will shift bearish when that happens. But until then, I want to keep my risk at a reasonable level. I want to participate in the upside, but I'm not willing to pile in, 100% max leverage with the market that we have now. I'm going to take my shots long. I'm going to keep my risk level moderate and at a level that I'm comfortable with. And I'm going to use that roll and protect strategy that we've been talking about, where if the market gives us a nice win, like on Visa last week, $10 in the money, at least, I want to take that off the table and put it in the bank and stay long. I don't want to leave that position with embedded gains out there for the market to take back at any moment. So, when you see positions that you're holding go deep in the money or give you deep embedded gains, roll that up, put some money in the bank, and stay long. That's my strategy. Because if you think about it, what do you do when you go to Vegas? You sit down with your significant other. How much can we afford to blow on this vacation? Is it $5,000? Is it $10,000? Whatever it is. But what you don't do is take your life savings out, get it all in cash, put it in a briefcase, and get on a plane. That's just stupid. And I think in this market, you've got to treat it like Vegas. Only play with what you're willing to lose. Participate in that upside. But know at any moment, whenever that moment comes, there's going to be a giant red bar. And if you keep that in the forefront of your thinking, I think everything will take care of itself with the market, and we'll do just fine. we will see that downside and we'll quickly reposition ourselves, get out of whatever calls that we had. We'll either step aside or we'll get bearish. And that'll be that. Then we'll be looking for short setups and we'll play that downside just like we did playing the upside. So that's my strategy in a nutshell. Just be careful out there if you've got, tons of leverage on, be real careful about that. I wouldn't want to see anybody get mortally wounded whenever this turn happens. Okay, if you're new here, there's links in the show notes where you can jump over to the blog. There's a lot of helpful information there, along with my commentary each day. There's helpful tips for aspiring traders at all levels. There's a link for you to register for my content, and you'll get it delivered each and every day with midday updates, 6 days a week. If you like the content here on the video, please give me a thumbs up. Certainly register for the channel. I will keep you filled with relevant and timely content. I'd love to have you. And please, if there's anyone in your trading group that you think might benefit from the content, I'd appreciate that you pass it along. So, this has been Chris Buss with Traders Profit Compass. Have a great day of trading and talk to you soon.